Can you imagine waiting 18 years for housing? Check it out, guys.
When I signed up for Section 8 and low-income housing, I did not feel that I would be on that list for 12 years.
Finding long-term housing within her budget has been an uphill battle for Tanya Frazier, a disabled woman who had to take care of 3 children. Tanya has been waiting 12 years to be granted affordable housing by the San Diego Housing Commission.
Sometimes hopeless that I'm never going to come up on that list.
ABC News, in collaboration with ABC-owned TV stations, has spent the last 6 months investigating the public and affordable housing crisis affecting cities and towns across the country. We found that for housing vouchers, which are local subsidies helping renters find homes on the private market, the average wait in San Diego County is 8 years. And for public housing, San Diego has the longest wait time of any large metro area in the U.S.
The wait list for public housing is over 18 years.
So I was driving around a neighborhood recently and I was honestly pretty surprised by what I found. They're calling it a homestead, but let me tell you, it's far from it. Sure, the houses are cute, but they're packed so tightly together that you won't have any yard space and your neighbors will practically be within arm's reach from you. And get this, guys, there's no parking behind your own garage. Yeah, you heard me right. You just get a garage space and that's about it. I mean, seriously? Like what kind of homestead is that? Now, I can understand the concept that they're going for, but it's just not living up to its name. Now, if they want to call it a homestead, then maybe it should have room for, land for growing your own stuff, I guess. Maybe a chicken coop, maybe a vegetable patch, if that's your thing. Otherwise, then how is it a homestead? But from what I see, it's just another housing development using the word homestead as clickbait. I mean, come on, let's be real here. Now, I don't want to be too negative, but just seeing neighborhoods like this, it's got me scratching my head a little bit. It seems like they're more interested in squeezing in as many houses as possible than actually creating a real homestead community, if you know what I mean. And don't even get me started on the whole rental situation. The front half is for ownership, while the back half is all rentals. I mean, seriously? Now, I'm not really a big fan of mixed hybrid communities like that. I mean, but these companies, they're just trying to push all sorts of stuff on us because they're having trouble selling things. Really though, sometimes it's just hard to imagine why some people choose living in an HOA community sometimes when there's other options available. Give me a mailbox at the end of my own driveway any day. Now, I heard some people talking and they're calling it a beige nightmare. Now, I bet some of you guys can relate to what I'm talking about here. Am I right? Right now, I'm honestly curious what the housing situation is going to be in years and years to come in terms of owners versus renters. Will either honestly have pride in their dwellings? But hey, let's see how this neighborhood develops over time, right? Maybe things will change. Maybe people will start actually taking more pride in their own spaces. We'll have to come back in a few months and see if there's any progress. But in the meantime, there's this housing affordability crisis to talk about, guys. Have you noticed this? Now, some people have been on a waiting list for a dozen years already, but the real kicker there is those 12 years isn't even the average wait time for public housing in some places. Last year, residents who made it on the top of the list, they had been waiting for as long as 18 years on average. San Diego County, they have the longest average public housing wait time among all the large U.S. metropolitan counties. But these long wait lists, they're getting even more common across the United States. So according to the data, households that received housing assistance last year, they had waited more than 2 years on average. And that's just the average for the whole country. Now, if you zoom in some of those counties, their average wait times were well over 5 years. More than 6 million Americans live in counties where public housing wait times are longer than a decade. But, we really don't hear much about this on mainstream media, nor do we hear the government talk much about this, huh? Another million Americans live in counties with wait lists longer than a decade for housing choice vouchers, or more commonly known as Section 8. But even if you do make it to the top of the list, it doesn't even get you that housing choice as advertised. You see, in most places, landlords can legally refuse to rent to voucher holders. Now, apparently only about 3 in 5 Section 8 recipients find housing before their vouchers expire. And on top of that, about a quarter of American renter households are considered severely rent burdened, meaning that they spend more than half of their income on housing. Now, last year, the Department of Housing and Urban Development Agency, they counted about 582,000 Americans experiencing homelessness, while at the same time, housing market economists like Ollie Wolf, they're watching very closely to see if there's a double dip recession in housing. Now, at the halfway mark in 2023, the new construction improvement seems to be sticking. or at least for now. New home sales in May were up 20% on a year-over-year basis, but just because home builders have escaped the housing market recession, it doesn't mean that they can't slip back into it. We're not so sure it's a straight line up, basically. And there's still bigger economic concerns that could impact housing demand, like the aftershocks of the Fed's rate hikes, and of course, the larger restrictive policy. Consumer spending could pull back or even completely fall out from the commercial real estate sector. So yeah, that is why the experts are watching very, very closely today to see if there's going to be a double dip recession in housing or if demographic supported demand is enough to withstand wider issues. Now, one key factor to consider, interest rate hikes, because I'm telling you guys, interest rates will determine the trajectory of the market. Now, the outlook of the U.S. housing market in the second half of the year comes down to two very familiar words: mortgage rates. So in the first half, high interest rates have kept housing in a state of suspended animation as borrowing costs priced out prospective buyers. Meanwhile, homeowners with mortgage rates of 3% or less are unwilling to sell, and they face having to borrow for their next home at something closer to 7%. Now, despite high demand and home prices that are now starting to fall just a little bit, actually home prices in my areas are going back up. But for the overall market, like I said, real estate's local. The market's still relatively sluggish at a point in the year where historically it's at a peak. Meanwhile, new construction's rising to meet some demand for single family homes, but it's still not going to be enough to meet the current market needs. So what exactly can homeowners expect for the latter half of 2023? While the Federal Reserve is expected to continue raising interest rates throughout the end of the year, industry leaders foresee mortgage rates dropping and home buying subsequently picking up as home prices fall and affordability improves. But still, very few expect a recovery that would allow the market to catch up with the pace of activity that the U.S. saw back in 2022. Now, the Federal Reserve has signaled that more rate hikes may be in store before the end of the year. Once the rate hikes slow or stop, affordability will start to improve. Now, experts see mortgage rates headed on a more stable path, meaning that as inflation is expected to continue cooling, mortgage rates are expected to decline. The June peak could be the final uptick before conditions begin to even out. Now, surprisingly, word on the real estate street is that they're expecting weak home prices over the summer months when they're typically at their peak. Like I said, in my area, we're actually seeing very strong prices. And if experts are reading this right, these price declines could see themselves continuing through early fall. Now, one hot take that I saw, average home prices in 2023 to fall 0.6% compared to 2022. Do you guys see that happening? I would definitely keep my powder dry for this one. What they're really hoping for is the inventory boost that's expected to help meet the high demand. Now, as mortgage rates cool, inventory is expected to tick up again throughout the latter half of the year. Because right now, the long-standing case of low inventory of existing homes is making it much harder for the market, at least for the buyers, that is. Now, to be fair, this ongoing lack of inventory or existing home inventory, it's giving a boost to the new home market, as May represented the largest single month jump in single family home starts in percentage terms since June of 2020. Some experts are also expecting that when rates drop back down to around 5.5%, that is when the inventory logjam should begin to clear. So they're calling it an unlock of inventory, something that could very well happen when mortgage rates get to about 5, maybe 5.5% at a sustainable level. Now, if that happens, there could very well be a flood of inventory in the market, and it's going to feel like the pandemic craze all over again. Meanwhile, home building's picking up to help fill those inventory gaps across the country, up 20% year over year and 12.2% from April. Now, according to Fannie Mae, they're still expecting a recession as the most likely outcome of the Fed's policy on interest rates. So why hasn't the housing market dropped out yet? Well, there's still that lack of existing homes for sale, which didn't improve this spring, even though it's the season when many homeowners put their houses on the market. Home buyers who had locked in low mortgage rates before the housing boom, they don't just want to up and sell their properties and have to face higher interest rates. They also mention aging baby boomers, many of which are choosing to stay at home rather than downsize. So that's why they're turning to new home construction, and that could take until, the next few months to actually be felt in home prices. But you gotta admit, it's not really that easy to be a landlord these days. Home prices are elevated, and rising interest rates means buyers have to face larger mortgage payments. And when you buy a house, you have to factor in more than just the mortgage payments if you're smart. Homeowners are also on the hook for property taxes, insurance, maintenance, and repairs. There's a lot of stuff. But these days, you don't need to be a landlord to start collecting rental income. New companies, including one backed by Jeff Bezos, have innovated ways for people to earn passive income in the real estate market. Publicly traded real estate investment trusts, also known as REITs, that focus on residential income, they could also be worth considering. So here's a look at 3 that Wall Street finds attractive. Mid-America Apartment Communities Incorporated, ticker symbol MAA. So Mid-America Apartment Communities is a REIT primarily focused on apartment communities in the high-growth Sunbelt region of the United States. Now, at the end of the first quarter, it had an ownership interest of 101,986 apartment units, including communities currently under development. With a quarterly dividend rate of $1.40 per share, this REIT offers an annual yield of 3.6%. Goldman Sachs analysts have a buy rating on Mid-America and a price target of $180. Now, because shares trade at $153.25 today, that means that price targets imply a potential upside of roughly 17%. Let's talk about Avalon Bay Communities, ticker symbol AVB. So Avalon Bay Communities is an apartment REIT that focuses on metropolitan areas in regions that they believe to have growing employment in high-wage sectors and lower housing affordability. So these regions include New England, the New York, New Jersey metro area, the Mid-Atlantic, Pacific Northwest, Northern and Southern California. So, so far the stock has surged 18% year to date, and they're seeing even more upside on the horizon. The analysts have a buy rating on Avalon Bay and a price target of $211, around 11% above where the stock sits today. Not to mention, Avalon Bay offers an annual dividend yield of 3.5%, some extra cash flow to buy up some more of those things for your portfolio, I guess. Camden Property Trust, ticker symbol CPT. So Camden Property Trust, they own, manage, develop, and acquire multifamily apartment communities. Now, as of April 30th, its portfolio consists of 172 properties totaling 58,702 apartments. This REIT pays quarterly dividends of $1 per share, meaning an annual yield of 3.6%. Barclays analyst has an overweight rating on Camden and a price target of $137. So potential upside of 24%. Well, guys, if you made it this far in the video, do your boy a favor, drop a quick like for the video. Also, if you enjoy content like this, please consider subscribing to the channel. I really appreciate hanging out with you guys today, and I'm gonna catch you guys on the next one.